better. Okay, sorry to interrupt.
Literally, it's sitting on the router. It's quite painful.
Okay.
No, just slightly. I mean, a decent positive reaction. Probably my favourite move this morning so far, apart from Bitcoin, which I was boasting about before I faded away. It was a DAX, which basically overnight bounced off its pivot level for the day, 12,944. We just sort of had a pull back from the first resistance. The pivot method, I think I explained a few days ago, but you can look it up. Very useful as a sort of backbone for trading on all markets intraday. And I think the other point to note as well probably is the pound, where I think quite a few people were looking for it to break down early in the week below the 130.50, 130 area, but it's held on. It's amazing. It's more tenacious than Theresa May. On the other side, probably a few things to look at really on the news side. Obviously on the stocks, Billiton updated the market, hoping to divest its onshore shale business. Shell, another obviously biggie in terms of market focus there. The production figures came out as well. And my favorite stock, I suppose, at the moment, Vodafone, talking about competition in Europe, and the shares there just near that all important £2.30 level. But those are my initial highlights of the day. If you can hear me, I hope.
Fantastic, Zach. Yeah, I think the audio is fine. If those in the room can just confirm, I think the Zach's coming through loud and clear now. But if you could use your chat box to let us know with a little Y to let us know that you're hearing okay, that would be helpful. I should have asked maybe at the start of the show. So thanks, Zach. This morning we've got 3 guests joining us through the next hour. Simon Denham from Time to Trade will be joining us first, and then we're going across to Charlie Burton at Easy Trader, and following Charlie we're going to go to Steve Ruffley at steveruffley.com. So I can see that Simon is already here, which is great, in the room, so we could cross to him now. What we'll do first of all is we'll take the microphone off and say good morning, Simon. It's Simon here. How are you?
Hello, Simon. It's Simon. It's major moment here.
Oh,
can you hear me?
I can hear you fine, loud and clear. You got logged in okay, which is great. Welcome to the show.
Great. Yeah, that's. I understand this is the first one, is it? So
this is the first week. So we've been live since Monday, and so we're still finding our feet a little bit. But it's pretty.
Still trying to find a bandwidth.
Right. Well,
so
we can launch in, I suppose. I mean, it's an interesting time in the markets because we seem to be rushing everywhere and going nowhere.
Simon, would you like to share a screen with the show, or are you happy just to go with?
I'm happy at this point just to chat, and if people wish to look at Time to Trade and appreciate the products that it offers, obviously we would be willing to do that. At a future time, I'll probably get a linked up page, and you guys can look at it and see what we offer.
Great.
But at this point, it's in your first week, it's probably a little bit OTT to be launching into technical.
That's right. What we're trying to do is just to get people to take on the markets. It's just a brief input, but just by way of quick background for those of you that don't know, you've been in the city for many years. I know you have a background in broking and been involved in some spread betting companies, but now one of your new projects is Time to Trade, which is a platform for traders and investors to effectively manage your strategies and trade signals.
Simon, I mean, Mr. Dennis, could I just ask? I mean, why did you? I mean, what's the sort of trigger for launching Time to Trade? I mean, obviously you had the history of doing other products over recent years. What was the sort of motivation behind this?
The motivation behind Time to Trade was that whilst there's lots of platforms, of course there are, they all do pretty much. In reality, they all do pretty much the same thing. They do what they say on the tin. Time to Trade was completely different, actually, and what its remit was the fact that Joe Blogg's trader, people like me, in fact, we can't actually write program, so it's a bit difficult for us to say, I want to buy the cable sterling dollar when the RSI is down at 20, the 20-day moving average is above the 5-day moving average, and then you can add in a whole load of other things that you feel like doing. I just want to buy when that happens and sell when something else happens, when various technical triggers occur. So it was almost impossible for a client to do that, and very difficult to do that, but also impossible for them to back test it. So what we did was we built a system where anyone with just point and click with their mouse can pick up a whole load of trading strategies that they create themselves, and then back test it, see whether it works. You never know. You might come up with some amazing strategy that has been missed by everyone, and you can set that off. And then not only that, you can just click a button, and it sets it off for real in the real world. So you can become your own. You can become your own hedge fund manager or quant trader or algo trader, and you don't have to be a computer. You don't have to be Bill Gates in order to work it out. No, you can, and at its tiniest level, even such a boring thing as drawing a trend line on a graph. Everybody can draw a trend line on a graph and say, I want to buy if it goes through that line. But actually, it's quite difficult with all of the CFD spread betting companies to say for that to actually automatically be done. Yes, you can draw a horizontal line and say I want to buy if the price goes above this price, but it's very difficult to do that on a trend line. Whereas at its most basic level, that is probably the most basic trigger signal we have. You can draw a trend line across the thing saying, right, that's the bullish trend line. Let's say it's a market going up. If it goes through that and either ticks through it, or the 10-minute closes through it, or the 1 hour closes through it, or the daily market closes through it, whatever the signal you wish to put to it, you say, right, if that event happens, then I want a short. I want them, and the market, our systems will push your trade into the real market and make a real trade. If you don't want to do that, we obviously just send out emails and SMS messages, so that the clients, we send off about 400,000 email messages a month, trigger signals to our clients. We don't know what they do with them. No doubt lots of them have got accounts with IG and City Index and etc., and they use those trigger signals to activate their trades elsewhere. We are in the process of launching our own CFD spread betting product, so at some point in the future we won't be giving away those signals for free, which we are at the moment, and we will expect the clients either to pay us for those signals or to trade with us. But at this point in time, anybody can go onto our platform, do it for free, have a look at everything, back test, and do what they like.
Simon, you said at the beginning that the market seemed to be rushing around, but actually not going anywhere. Is this a strange time that you think? I mean, are we going to resolve one way or the other? Or is it a phony market in some ways?
Everybody's frightened that we've had too much of a bull run, which we've had a very good. I mean, the Dow hasn't even had a correction for what, 14, 15 months, maybe longer actually. Not even a minor correction in the Dow. So people are worried. They're sitting there thinking, is this the moment? In the last 4 European trading sessions, before the Americans have even come in, we've had 100-point down days before the Americans have come in. Now it's actually not that frequent that happens, and to have sort of 3 in the last 4 or 5 trading sessions is quite odd. So you can see that the rest of the world is a little bit nervous. It's normally a very good way of making money, actually, oddly enough. If the Europeans sell the Dow or the S&P off by 100 points, it's normally a good buy signal, because the Americans hate the Europeans selling their market down. But it's getting nervous. As you can see, the Dow, the charts they're turning over. But for me, it's just nervousness. People are waiting to see. They think that there's going to be a correction, and so they're trying to second guess it at the moment. I note that retail clients are heavily short in the American indices. You can find that out quite easily from various sites. So I think they're rather prejudging the event, and it's dangerous to try to get ahead of the curve.
So I mean, on that basis, with that sort of confusion, really, the technical trader, if they've got a robust system or one they feel confident of with having back tested it, it's the right conditions for that, really, isn't it?
It's always the right conditions to technical. I mean, and technical trading is not a one-fits-all event. You will have lots of strategies. A strategy that works in bull markets, one works in bear, one that works in choppy trading activity. What you identify is which strategy you should be using. So you have your bull strategy, and then within your bull strategy there is a trigger that says, actually, we're not in that bull strategy anymore, and the trigger just turns it off, and you wait another event. You have a bear strategy that sits in the background. Some event happens, and suddenly your bear strategy is the one that's in play. So you know, it's easy to say that there's a one fits all product out there, but frankly there isn't, and anybody that says there is probably on a hiding to losing a lot of money. So you have to choose your strategies for the market that you're looking at, and trying to do otherwise there is no such thing as a pot of gold at the end of the rainbow. You have to work at it.
Yes, well, I think we've probably discovered that over recent years, well, especially since the GFC. But so for the time being, you're going with a trend really on equities.
The trend is still upward. Well, I mean, okay, fair enough. For the last few months, it's been a bit sideways, but in Europe especially. But the trend is still positive until an event happens that changes that. It's still a buy on dips. Sad to say. Well, very good if you're long.
Well, I mean, I'd be looking at the Dow chart. I would just, you see it now, and every time it dips back to the 50-day average, that's the blue line there. I don't know if you can see the chart, but just literally touches it and back up again. So I suppose in one of those situations where you try not to make things too complicated.
Well, the Dow at the moment is just buy it and hold it, which is amazing, considering that they have a president who seems to be thriving on conflict. So their business.
It's a wall of worry rally, isn't it? Still.
Yes, but as I said sort of earlier on, you can see from that there hasn't been a single pullback. I mean, when I say significant, there hasn't been a 5% pullback at all for the entire year. Which is incredible. Which is incredible. Normally, even in good bull markets, you'll have a 5% shift to the downside as people re-engage. But aside from that that period between March and May earlier this year, there's been nothing. So everybody's trying to prejudge, get in front of a seller, and it's just unlikely to happen unless something changes. The Fed is in hold mode. Well, I'm sorry, hold as the slow and steady increase in interest rates. They see no reason to jump the gun. Oil's looking bullish just for once, which might trigger a little bit of inflation. But overall, you look across the globe, and there's nothing really serious that you can put your finger on that will trigger a bear move, aside from some stupidity over in North Korea.
Well, touch wood. Simon Denham from Time to Trade. I think you're the only big figure in the city I haven't managed to interview until today, so you complete my set. I actually saw your platform just before the show started. It did actually look very good, so I might have a look at your URL later on. So congratulations on that.
Yeah.
But hopefully we'll speak again soon.
Will do. Cheers, Zach. Speak to you later.
Thank you,
Bye.
Simon.
Thank you. Cheers.
Cheers, Simon.
Thank you very much indeed there, Simon Denham at timetotrade.eu. Yeah, hopefully we'll have Simon or maybe Darren McGovern from Time to Trade on the Round the Clock Trader Monthly Summit that we do later in the month, and we can have a more in-depth view. Zach, comment from one of our listeners, Pete, says, do you not think that with all of Europe's problems, the funds are flowing out of the European equities and into the US, and the only place for those funds to go is the equity market? So is that a good opportunity for buying?
Well, when you hear the idea of going, out of Europe, I suppose it's based a bit on the Catalan situation. But Europe has actually been doing rather well. I mean, I think we've just got a story of, as we were saying with Simon, that equities just keep on trucking, and whether you put them in Europe or America or anywhere else, for the time being, the rally continues. So the market's been very kind to people up to this date.
Fantastic. Now I can see our next guest is in the room waiting, which is great. So we're going to go across to Charlie Burton at Easy Trader, get a feel for what he's trading today. Good morning, Charlie. I've taken the mic off mute. You should be able to hear
Morning, Simon.
and speak. Good morning. Hi, how are you?
Yeah, I'm very good, thank you. And you?
Very well, thank you. Yes, we're enjoying our early start this week, which is great fun. A slightly new format, which I think we discussed. We're doing sort of much shorter, more current market snapshots every morning. So it's good to have you here just to get your flavour of what you're looking at, where you think some of the trading opportunities might be. And of course, Zach, who's on the line here as well.
Yeah, morning, Zach.
Morning, Charlie. How are you?
Yeah, all good, very good. What I was hoping to do, Simon, I noticed that in the other presentation, I think I was listening along. He was just calling in. Would it be okay if I can show my charts as I go through my thoughts here? This one. Oh, great. Okay.
Absolutely. I was going to suggest we do that. So just going to make you the presenter now in the same way that we normally do at the Round the Clock events.
You can see that screen okay?
Fantastic. Super. So we're looking at the Japanese yen.
Don't worry. Yeah. Yes, that's right. Yeah. Do you want me to start, or how do we go here?
Please do. Just give us your thoughts. That would be fantastic, and tell us where you think. Where's it exciting at the moment?
Okay. Yeah, I mean, at the moment, I just wanted to go through some of my bigger picture analysis for the dollar yen, and so I'll start off with some higher time frames and just work it down to the lower time frames, and just give some of the technicals that I'm looking at with this market. But actually, before I go into the dollar yen currency pair itself, I just wanted to bring up a chart of the dollar index, because I think this is, for me, this is an interesting chart. If I can bring up a pen, Let's see if I can do this right. Okay, is that? Oh no, maybe the tool's not going to work on here. But okay, so let's just try one more time. No, pen doesn't want to work on this chart. Okay, what we had here, hopefully you can see around the 100 level on the dollar index. This is a weekly chart of the dollar index, by the way. The dollar got up to 100, pulled back a bit, came up to 100 again, pulled back, got up to 100 again, and then pulled away and again, and then eventually came up into the latter part of last year, 2016, and into early part of 2017. It broke up. It properly broke out of the that 100 level. But then, as we can see, as we've gone into this year, the dollar index has fallen away. Now, this pattern is actually quite of interest to me because this is a similar sort of technical pattern that I trade, whether it be on a daily chart or sometimes even on an intraday chart, whereby what's actually happening here is you've had a ceiling in a particular market, which has been finally got breached, like in this dollar yen, in this dollar index here, and then it's rolled all the way back over and then taken out the last lows. So we took out these last lows down here. So if I was looking at this from a normal chart perspective, I'd be saying, okay, there'll be a load of stops piling up below these lows as the market was going higher, and then eventually the market comes down, takes those stops out, and what often happens, oh look, the pen's working now. What often happens is the market then starts to creep its way back up again. And so that's exactly what I'm looking at here on the dollar yen at the moment. On the dollar index at the moment. Now I'm just going to erase all those drawings. Okay. And if I take that, oh no, pen's still on. Bear with me a second. I'm really good at this. There we go. So if I take that dollar index chart off, and then we come to the dollar yen, there's one time frame that I really like on this dollar yen, which is this weekly time frame. So we've got this wonderful trend line that I've had on this chart here for quite some time on the dollar yen, and we've just in the last week come back up to this trend line here, and I'm looking for ultimately for a breakout potentially on this dollar yen for a potential run up to around about 118. So in light of what I've just said about the dollar index, now obviously there's a yen side to this story, and the yen has been strong just again in the last week or so. But if the dollar yen itself can start to break out, then I'll be looking for 118 on that market. So I love this pattern here on the weekly chart, even the monthly time frame. Overall, it's okay. It's had a big pullback obviously into 2015 and 16, and we've just been consolidating for a long time, and I'm just waiting to see if we're going to get that breakout and we're going to see some more upside coming through there on the dollar yen. So as far as trading it's concerned, yes, we've got that potential breakout up here. I have some other strategies which, if we consolidate a little bit even down in this zone, I will start to what I call dip my toe in the water. And what I tend to do is, if it sets up, I'll dip my toe in the water somewhere in the mid 113s, and then if it breaks out, I'll then add to the position on a breakout. So that's quite often what I do is I'll put a smaller position in initially and then add to it on strength. So that's what I'd personally be looking at there. And so this is something which is very current for me on the dollar yen, saying, right, okay, if it can set up, then I'll be in on this one. And it doesn't really matter though if people are interested in it and saying, well, actually, I'll wait for the breakout of the trend line. Yeah, absolutely, wait for the breakout and then look for a subsequent little pullback or whatever you personally like to use. This is a market which I'm very keen on if it can set up properly. Is that okay?
Right. So that's basically, yeah. That's so I suppose it's part of the risk-on pattern there that we're still seeing in the major markets with your potential setup.
Yeah. Interestingly, listening to what Simon was just talking about the Dow in the last presentation. Yes, exactly. And it was interesting, like he said, that so many retail traders are short the key stock market indices, and we so often know what happens when too many of the retail public are on one side or another. Interestingly, actually, Zach, I was yeah, sorry, go on.
No, I'm just saying, how do you? I mean, clearly, a lot of people who you work with, let's say, their retail clients, retail traders. How do you, I mean, try and protect them from themselves in these situations, that they're obviously not looking at the chart or the what the market's telling them. They're just going by some emotional instinct, let's say.
Yeah, it happens a lot, and all you can do is explain it to them. In fact, one thing that you'll find, you'll chuckle to this one. Earlier on this year, you know, when we had the French elections back down here, and we gapped up on the euro dollar on the back of the French elections, and at that point, a lot of our retail our traders were all talking about this gap that had occurred on the euro dollar, and they were all talking about shorting it. So I quite blazingly said, right, in that case, I'm buying, because if you are a reflection and your emotions are a reflection of the wider trading public out there, then I probably would be better off doing the opposite of what you're doing. So you know, I'm quite open with them, and I'll tell them if I feel that they are making emotionally based decisions, and so. Because that's just sentiment for you, isn't it? So yeah, it happens all of the time. I hope we try and keep them on the right side, and obviously the market's the market, and doesn't mean to say that the euro dollar couldn't have come down. But when I get a sense of market sentiment across retail traders doing one thing, then I'll always look at the other side. And in fact, I remember Zach, yourself on Tip TV. A couple of years or so back, I was being interviewed on there, not by yourself, it was by someone else, and it was when the euro was right down, somewhere down here in 2015, and it was right down near its lows. And I remember there was so many people calling for the euro dollar to go to parity at that point. We were sitting at 105 or so, and the interview at that time on Tip TV was saying, Charlie, surely you see that the euro is going to go down to parity. And again, that was just another sign to me that, you know, market sentiment, when it gets too skewed in one direction, then probably something else is going to happen.
Okay, well, on that note, there's no cure for the retail investor sometime. They just follow their instincts. Thank you to Charlie Burton from Easy Trader.
Charlie, thank you very much. Just one question from our listener before you go. The dollar yen trigger, will it trigger before Christmas, in your opinion?
I would like it to, yes. I would like it to trigger in the next 2 to 3 weeks, yes.
Fantastic. There we go, Pete. Thank you very much indeed. Thank you, Charlie. Great to have you in, and we'll look forward to hearing you later again in the month at the.
Great stuff.
Many thanks. Bye bye for now.
Enjoy the rest of your day. Thanks.
Thank
you. Bye.
Thank you there, Charlie Burton, easytrader.com. So we're going back to Zach's screen, and we're going to welcome John Adamson from sharetalk.com, who has a stock of the day for us to tell us about. So as I fumble around with my mouse to bring John in, there we are. I can unmute his microphone. Okay. John, you're unmuted now. Good morning to you.
Good morning, Simon. How are you doing?
Very well, thank you. Thanks for joining again. And you have another stock of the day for us today. I think Zach is going to bring up that stock. What are we looking at today?
So we're looking at McCango Resources Limited, dual listed on the TSX and AIM. Came onto AIM April 2016. They've announced this morning that they are going to be receiving extra financing through the Talaxis vehicle, which is essentially a subsidiary of Noble Group. So Talaxis have basically agreed to fully fund a BFS for the Songwei Hill Rare Earths project in return for 49% interest in that particular project. McCango also hold another asset in the Thambani sort of uranium asset, but there's no news out on that today. But going back, Talaxis are investing 12 million British pounds in this project for the BFS in 3 tranches. So McCango before this morning had a market cap of 4 million. so with this 12 million investment, it doesn't take a genius to do the maths on what that's going to do to the MCAP. They've also, Telaxis have also got an option to acquire 26% of the project, a further 26%, if they can arrange funding for project development, which, given they're part of a $1 billion turnover group in Noble, may not be, you know, too far a stretch. So you could end up here with Noble having 75% of the project.
Sorry to interrupt you, John.
That's
this
okay.
Is actually just, you sound very laid back about it, but this is a brilliant development for McCango, isn't it? Really?
I actually got some feedback on one of my interviews last night saying I was too laid back. It's my personality, I'm afraid. Yes, I am laid back.
I thought I was laid back. But you're literally lying down.
If this is not RNS of the week, I'm not. You know, I'll be extremely surprised. It was on last look this morning. It was about 50% up. I suspect it's got a much longer way to go, to be honest. And the upshot of this is McCango will have 25% free carry in the project for taking on 12 million. So if they've got a free carry on a project that's got an MPV of 345 million US, if you work that out, it's roughly worth circa 65 million GBP to McCango on a free carry, with a market cap of what was 4 million. So compare the numbers, and I don't really need to tell you where it's going.
I mean, actually, on that note, in terms of where it's going, I mean, the company, but you know, until the last, say, couple of months, I mean, it was getting a lot of negative sort of chatter, and you know, the bears were out there, didn't want to break 4p.
Yeah.
You know, how? I mean, obviously, it had its fans, and I mean, I've listened to the company on quite a few occasions as well. I like the, you know,
yeah.
They seem to be nice people. No, they know what they're doing and everything else. But there was just this rumor, this whisper campaign against them, which was so severe that I mean, even if you know, I like the company, but it was putting me off. And it was just, I would say to myself, well, unless it breaks 4p, I'm not getting involved, because it just means that there's shorting in there, and you know, I could be taken out with that. How do you cope with, you know, this is, you know, for like a beginner or anybody else, how do you cope with the rumors in the market, or you know, the smear campaign against the stock, and then knowing that the value of the company?
I guess firstly, you got to look at the credibility of the people who are bearish on it. That's one thing. Secondly, look at the fundamentals of the company. Yes, it's had no income previously. It's, you know, it's an explorer. The board don't take any salary, but you know, admittedly, you know, they run it off expenses, and you know, they've got options, significant options in the company. But I think ever since IPO, they've had a very strong, you know, and before when they've been on TSX, this is a project that's got very strong potential with the EV, the electric vehicle market, which is now, you know, we're surging towards, you know, 2020, when a lot of these EU countries are now going wholly electric vehicle only. So some of the rare earths, I couldn't pronounce half of them, to be honest, but some of the rare earths they're coming out with at Songwei, they're looking to do these R&D project with Metallysis, which is another, you read it today's RNS, you've got Telaxis are also getting involved with that R&D project to produce magnets for electric vehicles. So they're wanting a piece of the pie on all fronts. So McCango have built up this portfolio between Songwei, Thambani, and the R&D project with Metallysis. The news that they've been coming out with over the last 18 months has all been positive in my eyes. Share Talk have obviously followed this company since IPO. And I don't know. I think if you're going to invest in this type of company, you have to be aware that the level of financing they're looking for is not the kind of financing that they can get overnight. But as long as you're confident that company's moving in the right direction, speaking to the right people, keeping on delivering news that is actually going to attract those kind of financiers, which I believe they have been doing, then I think when people are bearish on it, it's the whole ignore the noise scenario. And for me, yes, it has been quite loud on the bear side, but only from a very small minority of people who have an ability to make it loud, if that makes sense.
Yes, it certainly does. I wouldn't want to mention any names, but
no, we're not naming names.
What's interesting is that actually after the logjam of that bearishness is broken, after say the shares broke 4p, you get such a strong move. I mean, the stock's now up 90% as we speak. So
right,
I mean, it really is. Yeah, so it's up and it's at nearly 7p now. So
yeah.
you know, my previous target on it was if it breaks 4, it'll go to 7, as you can see from the trend line there. So we're nearly there, or we will be nearly there. It's a delayed chart.
Yeah, I mean, new investors take note that there is a lot of warrants around at 6.6p. So anyone who's come in at IPO, they're probably more than likely at 3.3 pence price at IPO will no doubt have warrants at 6.6. So there will be, some conversions coming, but obviously it'll have to stick above that for a certain time period, which I normally believe is around 5 days. But admittedly, I haven't gone back and looked at that first day dealings RNS, but the info should be in there for anyone who wants to have a look.
All right. Well, that sounds very healthy indeed. They're just only up 96% at the moment. We'll see if they can get up to triple figures, but
is that all?
percentage figures?
Yeah.
So that's good stuff. John Adamson from sharetalk.com, thank you very much, and hopefully there'll be many more stocks like this in your laid-back daily review.
Thank you, Zach.
Thank you.
Fantastic. Thank you, John, from me, and we're going to cross over now to our next speaker. Delighted to welcome Steve Ruffley, who is going to be joining us from somewhat further afield. Steve has transported to the other side of the world and is joining us live from New Zealand. So let me bring Steve into the event. Steve, good morning. Good evening for you, of course. It's Thursday night where you are. How are you?
I'm good, mate. How are you?
Very well. Thank you for joining us at this time. This is the early morning start for us. We're trialing a week of RTCTV daily shows where we're getting a more current look at the markets, a very quick input from the speakers, and that's why we're pleased to have you with us this morning to have a look at what you're trading. As we normally do, shall we go across to your screens so we can see the charts?
Yeah, absolutely. Yeah, I can see you on Reuters, so you've definitely got some big boys behind you.
That's just me.
That's Zach Meir, actually. Sorry, that's not my screen. We've been on Zach. So Zach, I don't know if you've met Steve before.
I've met him. I've read his book. I've shaken him by the hand and everything.
Fantastic. Now, we both have something in common, of course, now, which is that you both are mentors with Pelican, and you have your various mentor groups. I know, Steve, you've got your premium group started. I know, Zach, you've recently started your group as well. So,
yep.
A great service there. I know the chaps, Mike and Peter, are doing a good job at building up the business there. They've been through various rounds of funding and finance, so they have very good technology behind the app, which is improving all the time. So we'll have a look at that later. Now, Steve, we're looking at a screen, but it's not the screen with your charts.
Okay, just
yeah, it must be
1 second.
one of the multi-screens.
Okay, well, I'll move it around this screen.
Yeah, maybe we're looking at the icons. There we go.
There we
Yeah,
go. Last screen.
you pulled it
I've
off.
got so many screens, Simon. You know me.
I
I'm
do.
out of many screens.
I'm looking at your
You'll
screen
make
myself, of course.
Okay, no problem. But I think the thing for me right now is that, as I said, the world is moving in a very different way than I understand. I mean, this whole idea that interest rates, inflation should move, figures and move kind of, government policy in the same way. I think it's kind of quite laughable. The world has moved leaps and bounds since the credit crunch, and we've kept the markets buoyant by quantitative easing, keeping interest rates low. And we've expected inflation to follow suit, and we expected people to, kind of act in a different way. The fact is, people are acting the same way. They've stuck to assets they understand, and they've drove the stock markets, and they've drove the kind of, the demand for products of what we call, in quote, safety, in a way that the markets really can't handle. So for me, I'm really looking for the edge in a different way. I've gone well away from the indices. I'm going to show you some indices now, and we're looking at the Dow, we're looking at the S&P 500, the DAX. Now, you tell me, I've been trading for a long time. These are the monthly charts. There's no way you draw a trend line, with that steepness. There's no way. But everybody that's tried to short the stock market, tried to find the top, has been burnt. So I'm staying well away from the stock market. That's my first thing. Gold, again, I'm putting this up because it's obviously meant to be an indirect correlation to what is happening in the stock market. When the stock markets are up, that means everything's fine. We're all good. But we've got Brexit, we've got problems in France, we've got problems in Germany, problems with migration, we've got Donald Trump, we've got North Korea. We've got some pretty big major problems, yet stock markets are making major highs. But gold, if that was going to be, the safe haven for everyone to come back into, to pile into for that, safety, then we shouldn't be back to, 14, 15, 1600, making 2000. Bitcoin, that's jumped 30%, 40%. That's, up to these upper levels. But Bitcoin can do it. Why can't gold do it? It all goes back to this idea that we're a small player in this global elitist kind of economy. Now, when I talk about this global elitist, I'm not a global elite by any stretch of the imagination. I'm a small trader, but I know the rich. I know the 1%. I do know these guys, and they play a very different game than we do. So when we kind of scroll down from things like gold, it's still a sell for me. We see these big Fibonacci's, the kind of 50%, the 61.8, all this uncertainty in the world has been priced in now. And if gold was going to be back to, 1900, it would have done it by now. I was thinking it was quoted back in 2016 in the FT, saying that, there's not enough fear and greed to push gold back to these levels. And I still believe that. So, with the dollar strength that's invariably going to be there with the interest rate hikes, gold is going to find some emphasis, some plateau. And if it's nuclear war, sure, it might get to here. But if it's nuclear war, maybe there's no world left. So what's the point of it being up here? The real sensible players in the world, the real people that are planning for the future, the world after Trump, which hopefully is very soon, will see that the world doesn't necessarily need an old-fashioned store of wealth, an old-fashioned, outdated way of, protecting against inflation as a store of wealth as gold, and it will come back down. And again, technically, fundamentally, you look at that chart and you tell me, is that coming back to 1900, or is it going back to 1000, where I think it's going to get to? Well, right now, you can make the argument, it's not 50-50, it's probably 70-30 stacked in my favour. It's still coming down before it goes up. One thing is certain.
Steve, so a question there.
Yes.
Steve, you mentioned that, we mentioned Bitcoin, or you saying how much it surged. It hasn't Bitcoin really taken over from gold as being the inflation hedge and the fear hedge and all the other that type of thing, because basically it's done. It's over 7,000 now. It's done what we would have thought gold was going to do. I mean, 5 years ago, you would probably thought gold would be at 7,000 or 10,000 or whatever it is, and it just seems gold's been manipulated on the downside, and the free market Bitcoin has actually done what you'd want a store of value to do.
Well, it depends, Zach, who you listen to, and it depends who you believe. I mean, at the end of the day, markets are markets. They provide a service. They go up, they go down. Bitcoin's still unregulated. There's 21 million contracts of Bitcoin, so it's a scarce commodity. It's difficult to mine. Would you put your mortgage on Bitcoin? mean, it's very famously, people have come out and said, Bitcoin's for speculating millennials, but maybe the market's changed. I mean, this idea of a balanced portfolio these days, the long-term investor, where are they? The short-term investors are everywhere. If you're a short-term investor, what you're going to look for, 30% move in Bitcoin or a 2% move in stocks. I mean, I don't really look at the long term. I mean, I've been very clear. I mean, people I know, like Shah Heftez, the managing director of Intertrader. He's been very kind of, bullish of Bitcoin, and he's very kind of vocal about it. I've said, absolutely, kind of unequivocally, until it's regulated, how can it be part of any, bigger portfolios, or how can it be regulated? How can any respectable or respected investor, trader, fund manager be involved in Bitcoin when it can drop 30% in a day? You can't. So it's for a different investor for sure, but it's certainly not part of any portfolio until it becomes regulated. I mean, it depends how you're looking at it. I mean, obviously you've met me, Zach. We've talked, we've discussed ideas, but Bitcoin for me it's a punt. It's exciting. Something that moves that much can make people rich. The get rich quick is why we're in this situation now. Of economies not functioning in the right way. Things should move in a structured manner so people can plan around it. At the end of the day, until Bitcoin's regulated, I can't say it can be taken seriously. But that's just my personal opinion. I don't say there can't be money to be made out of Bitcoin. There can be, but I tell you what, you have to be ballsy and you have to have some big old stops.
Right, and just to finish, what would be your trade of the moment, or the market to look at the moment?
I mean, I'm going back to things I know. So I'm sat here in New Zealand. Just got a brand new New Zealand president, 37 years old, same age as me, Jacinda Mehta, and the counterparts. I would say the New Zealand dollar is one to look at. I mean, at the end of the day, I think it's going to go down. At the end of the day, there are basically an exporting nation, 4.8 million people, same landmass as UK. These are the charts. I mean, these are just 15 minutes. If you go back to the dailies really for me kind of scream, what's going to happen in the future. And at the end of the day, I only know what happened in the past, what's going to happen in the future. That we're definitely looking at low levels, 10 at 0.68169, and there's nothing down to kind of below 0.63. And then a pound, we're looking basically above 1.94, probably back to 2.2, 2.3. If you look back at the monthlies and the pound, obviously a massive drop after Brexit. But we're talking again numbers. We're talking about stability, sensibility. We're talking about 4.8 million people bases the entire UK. Sheep farmers, people investing in property, people that are heavily involved, with the involvement of China. For me, basically draw a basic Fibonacci from the high to the low. If we don't get back to just below 2.1, I'd be absolutely amazed. There's so much value from the low point, and I've been low 6-7 figures near enough from here. So again, I'm laughing. But at the end of the day, it's looking at those Fibonacci levels where the market's been left. As you know, everybody knows, going to the right. But for me, there's a big drop off. At the end of the day, the US has really kind of set its stall. Like Janet Yellen's going to leave, but whoever comes in, it's really kind of a 10-year plan. Can't be too much meddled with. So for me, it's very, very difficult for an economy like New Zealand that's very stable, very neutral, and it's big brother in Australia, 25 years without recession, to say they can do much with interest rates. They can't, because they're too heavily involved. At the end of the day, I think it's going to go back to this idea that commodity-based currencies and this end of the world, it's on its own. It's on its own. So the US is going to do what it's going to do. It's going to put up interest rates to whatever level. I mean, I think the interest rate is going to certainly slow down. I think we all expect that. But the dollar's going to remain. It's going to remain key, and it's going to remain king, regardless of Donald Trump. But all the rest of the currencies have to find a level playing field. So I would say that the pound is massively oversold against the New Zealand dollar, against the Aussie, and I still think over 1.32 in the dollar. We've still got lots and lots of upside, because let's face it, the world panicked over Brexit. It was a surprise. The world sold off, but Brexit's going to get fixed. UK used to rule the empire. It's still going to be around, no matter who's in charge of the UK. We might not like, Theresa May. We certainly don't like Jeremy Corbyn. But whatever it is, somebody's going to come in, and the UK is still going to be a little tiny corner of the earth that still speaks some sort of sense. So if it doesn't, then the world's pretty much finished. So currencies, gold, it's all irrelevant. Buy Bitcoin and buy yourself a Ferrari and go and drive off a cliff because the world's ended. That's my kind of thoughts.
Thank you, Steve. Good to hear from you after so long, and hopefully we'll speak again soon.
Yep, no worries, guys.
Steve, thanks very much again from me. Good night now.
Yeah, cheers, Simon. See you later.
Zach, back to you for a final sum up on today.
Yeah, was just looking at the FTSE now, broken back below the pivot level at 75, so possibly heading down towards that 73.40 area, which is the first support. I have the words of Carol Harmer in my head from yesterday about this market being a silent as strength, so it looks as though traders are noting that, and we shall see how that pans out for the rest of the day.
Fantastic. Zach, thank you very much from me again for hosting today. I think that brings us rather neatly up to almost to 9 o'clock. So we'll call it to a close there today. Wishing everybody well for today, Thursday, and we'll look forward to seeing you again in the morning for the last of the week.